I thought, so it's funny, I only just got here. Earlier in the week, I was back in London, and my co-founder, Trevor, who I think you put your hand up as a boring person and a...
Yeah.
Yep, okay.
Boring person and first time taking.
Excellent, okay. So I'm just going to read you some of the messages, like through the eyes of a traditional finance person at a Web3 event for the first time, right? So these are some of the messages I've been receiving. What exactly is the dress code for this event? Do I have to buy a $500 black t-shirt? Yes, I said. And what exactly is a hype party? A lot of these events seem to make a big deal about who their executive chef is and how good their sushi is without actually mentioning what their business model is or how they plan to make money. This one's a picture of what appears to be SpongeBob SquarePants as a headshot for a panelist. This didn't happen at mining conferences. And this was late the other night. I think it's the jet lag talking. It's a photo of a mermaid performance. Fuck this, I'm going to bed. So, but I guess that's the tone here. So we've been working really hard on something that is bringing the traditional boring world of physical commodities to something that can be enabled by and invested into by what is an amazing, probably the financial revolution or perhaps social revolution of our time, which is Web3. So we're thrilled to have that discussion. We don't have any executive shit. You might get a cup of coffee if you're lucky. And it's great that there's so many people in the room to come and talk about this. So what we were going to do is show you a little bit about what Salus does with IOTA. And then we're going to have a bit of a panel discussion with some people who bring all of those pieces of expertise together, answer some questions and have some chats afterwards and talk to you all about what we're doing. And hopefully that sounds like what you signed up for. And if you're waiting for the mermaid show, I think Trevor's got his flippers out there, so we'll get that going later. So we'll just show you the video. The video was quite expensive, so every time we show it, it gets proportionally cheaper. So we're going to show you the video. It's 2 minutes long, but it gives you an idea of the problem space that we're working on, and that sets the tone for the discussion.
The energy transition needs critical minerals, like copper, lithium, and rare earths. Demand is rising fast, but supply is growing more complex, with smaller producers in more fragmented regions. Today's system is broken. Financing flows through a web of actors, each adding costs, delays, and complexity. The result? Weeks or even months of waiting, denying miners timely payment and stripping value from the system. Everyone needs liquidity, but banks are overwhelmed by risk, regulation, and outdated paper processes, and can't even trust that the cargo even exists. The result? A global trade in essential materials, blocked by complexity and mistrust. Yet new funders are ready to enter, from private capital and impact funds to stablecoin liquidity pools. What they need is clarity, confidence, and a way in. Salus delivers it, a digital platform that connects mineral suppliers with funders through verified, on-chain infrastructure. Salus verifies every shipment with real-time data from IoT devices. Smart contracts instantly transfer cargo ownership. KYC, compliance checks, and insurance validation are built in. All trade documentation is digitized and analyzed, creating a single, auditable source of truth. Funders gain full visibility and control. Suppliers get faster access to capital, without large balance sheets or traditional collateral. The result is a smooth, secure, financeable flow of minerals. Powered by IOTA, Twin, and distributed ledger technology, Salus makes each shipment verifiable, traceable, and auditable. Salus brings liquidity to supply chains, clarity to global finance, and trust to a critical industry. Salus turns complexity into clarity and puts critical minerals trade on-chain.
I want to start with a little bit of personal origin story, what brought you to this room. Perhaps, Dominic, you told me after a couple of drinks your story. Last week we were having a chat in London. It's quite an amazing one. Perhaps we'll have the non-couple of drinks version of it. But how did you find your way here? You've been through multiple cycles, 2017, peak hype. IOTA stayed the course. There's a really clear focus and mission now. So give us a little bit of your way into this space and where you see IOTA right now.
Like from the start. So I think the main thing that really excited me about the entire blockchain technology and then also the industry was this notion of permissionless innovation, right? Anybody can just use the technology, can build on top of it, and create new use cases, right? It isn't the technology that discriminates, right? You're not being excluded, right? And back then I was, I think, like 16, 15 years old when I joined the entire space, and so I was actually empowered, thanks to Bitcoin, thanks to the blockchain technology, to build my own company, right? And so I think that was really amazing, because actually I wasn't able to open a PayPal account, right? Because you have to be 18 years old to open a PayPal account. And so that's how I learned about Bitcoin, and I've been focused on it ever since, right? And I think for me it's really about the impact that we can create in a real world, right? With the technology that is going to be as important as the internet, that is going to be as important as the cloud, as important as AI, because it's really going to transform how we do things in a global manner, right? And so I think trade for us is really the main area where blockchain makes a lot of sense, right? We're talking about cross-border transactions, trust that needs to be established between one country and another country, and I think especially in today's world, trust is a very important property that we need in order to grow and in order to work together in better ways, right? So this is obviously our focus at IOTA is to establish this digital infrastructure that makes it possible for countries, for people, and obviously for enterprises to trust each other in a scalable way, in the same way that the internet has empowered us to communicate globally. And so this is also why we're very excited to work with you guys on critical minerals and supply chain finance, and with that make the world a little bit more connected and more global.
Awesome, awesome. And a great story as well. And there's a lot of people who've ridden up and down on various, personal wealth creation journeys and voyages of discovery, and without embarrassing you, I think what's significant is that you stuck the course and you stuck to the mission, and you're focusing now on real world, where a lot of people necessarily wouldn't have done. So I think we're very lucky to have you in the room and to kind of have you in the community, so that's great. Trevor, you had a different route here, a bit more traditional.
Yeah, about as different as you can imagine, probably. So my background is in metals and mining. I worked for, among others, like Rio Tinto for a very long time, including a couple of very enjoyable years in Singapore, mainly doing sales and marketing things. And I had a couple of years working in Ulaanbaatar, Mongolia, where I managed supply chains, like physical movement of cargoes across borders, copper concentrate in bags, in trucks, and all of the sort of the contract to cash, paper, document, cash cycle that goes with that. I worked in third-party logistics, warehousing. I ran some facilities in Johor, not that far from here as well. And one of the things that always amazed me, and it's a really hard conversation to have with people that don't have experience in it, is quite how backward commodity supply chains are. The reliance on paper, the reliance on individual original documents with a red stamp or a wet ink signature on it that are DHL'd around the world, and the cost of things when they go wrong. So I've seen it before where vessels coming into the port of Taichung, they won't come in because there's a comma rather than a full stop on a bill of lading, and a bank won't release it. So the documents are reissued. Meanwhile, the vessel master is charging maybe $50,000 a day for detention while he's sat waiting for it. Like, the costs add up enormously for basic errors. So I think from that perspective, it's always been interesting to see what blockchain can do here, just single source of truth. And the development that we've seen in IoT devices gets really cool, in that a lot of the problems you have, there's a big supply chain finance gap in critical minerals. Like, the world needs, we need tantalum, we need hafnium, we need tin, we need niobium, we need rhenium, we need antimony. All of these products, none of which are being mined by Rio Tinto in Australia or by Freeport in the US. These are all coming from small producers in challenging parts of the world, and they need finance. They're genuinely SMEs. They might be a $5 million company that's producing $100 million of product every month. They've got to pay their suppliers. They've got to pay for their fuel, and they really struggle for finance because people don't really know what they're financing. Here's a bag of tantalum in Rwanda. What are you going to do with it? Are you happy to finance it? No. What's tantalum? Where's Rwanda? What happens if it goes wrong? And what we've done with Salus is essentially, with a network of IoT devices, being able to de-risk it. And I think that's really cool. Like, we haven't had to invent any of our own hardware, which is amazing. You know, if we were doing this 5 or 10 years ago, we absolutely would have done. But essentially, we have bought a series of off-the-shelf products, and the IP is in the way they're put together, and then putting them on chain through IOTA. But actually, like the hardware, none of it's ours. It's great. You know, we just buy this stuff, go on a plane with a suitcase, go to Rwanda, stick it in a box.
Yeah, fantastic. Okay, and Ayad, since you're next in the, thank you very much for joining us. Tell us the view. Zodia, I think, is one of the kind of the marquee names in really kind of institutional grade services and solutions in what can be a bit of a Wild West kind of space traditionally. You guys have done a great job of bringing institutions to the table and bringing the kind of the quality in the product up. Post Genius Act, you know, potentially coming towards maybe the top of a hype cycle in a way, in some ways. Where's the institutional demand? What are you guys solving for? How do you look at this real world asset space, and how do you feel about the kind of the Web3 going mainstream 2025 narrative?
Yes, thanks, James. Hello, everyone. I'm Ayad Bhatt. I'm the Senior Executive Officer of Zodia Markets in Abu Dhabi. Just quick, your backgrounds are a lot more interesting than mine. My foray into digital assets came because of my background in trading. So I used to trade foreign exchange options at Citibank, a couple of blocks to our left. And it came out of boredom and monotony and getting tired of banking bureaucracy that I decided to try crypto derivatives instead of foreign exchange options. So I ran a prop trading shop in crypto derivatives, which eventually evolved to an OTC brokerage, and then got acquired by Zodia Markets. So there was no world-changing vision that Dominic had. It was more about an asset class which was very interesting to trade. And then I was constantly being asked by clients, friends, institutional partners about how can I use crypto other than hoping that I buy it and it goes up, and how can they access it? So the usage and access are the two biggest questions that Zodia Markets is trying to solve, and that was sort of my inspiration to join with Zodia Markets. Institutions are very open-minded now to look at blockchain to evolve their very dated treasury operations. Right? And the barrier to dollar banking, dollar clearing is getting higher and higher, especially in emerging market currencies that you guys have highlighted. And you talk about sort of, if you extend it, CIS region, Middle East, Lebanon, Egypt, Pakistan, India, the ability to open a dollar bank account for legitimate businesses is very much hampered. Right? So the problem for them is that they need to make a payment in another country, and firstly, they can't access dollars, and if they do, it takes ages, right? And it's not 24/7. And that is the problem that we try to solve. So we facilitate access to digital assets and exit, because eventually those real-world companies need to get real fiat to pay their employees or OPEX. And we do that in industry-leading settlement speed, right? Now, I have to acknowledge our majority shareholder, which is Standard Chartered Bank, and they support us with banking, foreign exchange liquidity, credit line, and that's what enables us to be the choice for institutions to help with cross-border payments. So oil and gas, metals, commodities in UAE, for instance, there's gold trading that goes on, solar energy. Even there's high-priced items, the private jets, etc. So there's a whole economy which is embracing Tether, and the regulations make people comfortable that their assets are safe and they're playing with the reliable and regulated partners.
Great. Okay, we'll come back to a little bit some of the specific challenges potentially that you face, because I think it's a really interesting experience set and you guys have done very well. But I just want to turn to you, Tom. Tell us about the 10-year overnight success that is trade flow capital management and trade, and the problem that you solve as a funder in these markets and what you've had to do and some of the blood, sweat and tears that have got you to where we are.
Thank you, James. Yes, I used to look younger and had hair. Yes, and so yeah, it's been 10 years, in fact, since I went and met with our seed investor, who's I won't name, but who's sitting in our room here, so he knows the journey, and so to say, oh, you know, there's this trade finance gap. How about there seems to be a very interesting opportunity and problem here to solve, and you know, I think we might have an idea here, and it was initially not blockchain, but certainly digital. So Trade Flow Capital evolved, kicked off the project in 2016. We went live in 2018 with a fund. So we are a fund manager, an asset manager, investing into physical trade flows. But one of the biggest issues, particularly for banks and other lenders, with particularly supporting small, medium-sized firms, and when I say small, medium-sized, but in agris, energy and metals, that's anything up to like 300 million turnover, you're still maybe not getting the cup of coffee at your usual bank, but it's not because the bank doesn't want to deal with you, in all fairness, it's just because the size of your transactions is too small. You know, the cost for a typical bank to onboard you, KYC you, maintain you as a customer, etc., is too high versus what they can actually reasonably charge you for funding your imports and exports, or whether it's soya or rice or diesel or critical minerals, etc. And one of the biggest issues was, okay, well, if these small lenders, how do we help them? You know, what do they actually need to do? They actually just need to move stuff. They don't really want to borrow money, but that's the usual fashion. So we looked at the problem from the investor standpoint. How can we make it safe to support small firms in emerging markets where there may be a lack of transparency of entities or information onshore? And we realized, be the principal, be the owner of the commodity. So the simple answer was, don't lend money, own the commodity, sit between suppliers and buyers. You know.
And why can't banks do that anymore?
Yes, so I guess my background, 35 years in commodities, I was doing it in banks before, but post the global financial crisis in 2008, a lot of regulations, a lot of accounting changes of how banks account for risk on their balance sheet, sort of delevered the banks. So they just made it less and less profitable to, you know, and less incentives for them to own the commodity as a credit risk mitigation on their balance sheet just started to erode and disappear. Now vanished under Basel III regulation, pretty much. So that meant that, well, owning the asset doesn't help them at all in terms of the capital they have to place as being at risk on their balance sheet.
So that's a very geeky and technical but important point. Like, the world's capital markets have shrunk at a time that we need to expand them. That's not great for small companies in the developing world. It's not great for us as end consumers and end users. And that's a sort of function of regulation, and very sensible regulation, but this gap is quite significant. It's not getting any smaller, not since you started.
No, I mean, we started 2016 at 600 billion. Now it's, according to the World Bank, $5 trillion gap. Within that, we're probably working within an ecosystem of around 600-700 billion, we estimate, with SMEs. And the thing is, what we've done is revolutionized how trade can be done. So we've digitized from day one. I didn't have, you know, the old legacy systems to deal with inside a bank. So as a new fund, we could, from day one, blank whiteboard, just digitize everything. So everything from the onboarding of counterparties, KYC, ML, through to monitoring and looking at the transactions, deciding which trades are good or not, and tracking and tracing that. So what we did was, from port to port, owning stuff on a ship, moving it to a bonded warehouse at the other side and getting paid. So we sort of did that sort of international leg, which has helped a lot of SMEs already. We've done over 5,000 trades, touching 18 countries and 35 commodities, with 0 defaults.
That's an important point as well. And that's an amazing track record for the fund. But actually what a lot of people wouldn't realise is trade finance in general as an asset class has an extremely low default rate. Is that right?
That's correct. Correct. Yes. Yeah. Very correct. I mean, it's less than 0.5%.
And the yields, just quickly, you've had your best month ever?
Yes. So we've just had our best month ever since launching the funds in 2018. Thanks to working with Salus, I think it's fair to say. And I think that brings me to the point that we've always done the international legs, bulk commodities. We couldn't go onshore. We managed to digitize, and the industry, port operators, shipping firms have digitized a lot post-COVID because, to Trevor's point, the DHL and FedEx wouldn't move around during COVID, and everyone went, ooh, my ship is stuck, it's costing me a lot of money, and I can't get the documents delivered to the port. So there's been a lot of change there, which is great. It worked for our business model. When we started, we had to put IoT, well, it wasn't, I don't think you'd call it IoT device. It was like a massive padlock, which was used by the Singapore Armed Forces to track their weapons overseas, and they let us use them. We're sticking it on containers. So we had to be prepared to export all of this equipment around the world in 2018. Now, thank goodness, it's automatically done by the container operators. But we had our best month, and I think it's because what we managed to do is build the digital platform, but also the legal infrastructure, and also the risk management. And our vision was to bring trade finance, trade as an asset class, I think, since we're owning the asset, trade as an asset class, and make it institutional grade. We got an A- rating now in 2023 for the fund, and literally on the 1st of October we went live with a 100% capital protection wrapper backed by AA household insurers, which we think can start to open up the private credit. The idea was, and also with the banks as well, allow the banks to use that, because with that insurance they get capital, capital benefits on their balance sheet, so they can also start pumping liquidity into this space as well.
Fantastic. Okay, and last question for you, Tom, and I'll ask you, Trevor, to follow up. What allowed you to? How did we persuade you to put some of your intellectual property that you've bootstrapped in the last 10 years into Salus? Why would you do that? You've done an amazing job. You've built a proprietary infrastructure. You're deploying capital. Why Salus? Why the inland leg? Give people a little bit of context of why you might do that.
First, of course, we like you.
We charmed it out of you.
But also, from an asset management standpoint, that getting that first mile, that transparency, the provenance, the oversight, that first mile, which we've never had as an asset manager, to diversify, and also, we're searching for yield for our investors, and the closer you can get to the producer, the higher the margins start to look, but also being able to go for the critical minerals, which is usually small volume, higher value. We just wouldn't be able to do unless you've got that real touchy-feely ongoing oversight, but also I think you got some insurance stuff as well, thanks to the technology.
Yeah.
So what's making, Salus is making these onshore trades both investable for us, but insurable. And that certainly contributed to our best month this year.
Yeah, fantastic. Trevor, do you want to pick up on that? So what, for the non-trade finance experts in the room, why is inland critical minerals so different and difficult compared to vessels on a material on a vessel? Why does that attract a higher yield, and what kind of challenges do you have to solve for?
Yeah, I think it is an attractive asset class, to your point, Tom. We're typically seeing people paying mid to low to mid-teens on a 30 to 60 day lockup. If you go into the bond market looking for 13% yield, you're tying your money up for 10, 12 years sometimes. So it's really attractive. It's self-liquidating. The product is sold, you get your money back. You don't need an exit event. You don't need an IPO. You don't need a capital market. So you just sell the product, you get your money back. They're typically uncorrelated with other financial instruments, and sometimes even inversely correlated. The world needs stuff, And even companies, when they're in real trouble, they keep their inventory moving. It's a very attractive class. Why are the yields so good? Partly there's a complexity hurdle. Like you say the headline numbers, 13% at 30 days. Oh, that's really exciting. So yeah, it's in a bag in Rwanda. There's a complexity hurdle that you've got to understand. If it goes wrong, there's a process here. And one of the things that Salus does is to solve that, or help solve that. There's a complexity hurdle, which is where you get the yield. I think it's a complexity hurdle more than a risk hurdle. Like the risk is mispriced in these countries, given the security of the asset, how much people need critical minerals, the fact that you've actually got a product that if everyone in the supply chain goes bankrupt overnight, it's yours, you're just going to sell it to someone else. And we were very pleased at Salus to close a cargo insurance policy with Chubb, serious insurance underwriter, who, based on our risk transformation methodology, they're happy to underwrite the value of the cargo for sort of general things that might go wrong with it. It's the first question I have: what happens if my stuff gets nicked? It's like, no, Chubb will pay it out. It's much easier to explain your methodology to one insurance underwriter than to 15 fund managers generally. So yeah, I think that's it. People don't understand it. Traditionally, cargo on the water is more regulated, it's more uniform. There's a standard BL, and that has been seen as sort of the gold standard of a title document that people are happy to finance. I've worked in this for a lot of my career. I've always found it a little bit weird that people accept a BL. Like, it's fine if you have a BL from Maersk or CMA, but individual vessel owner in Indonesia, they discharge their cargo when they want to and they go off to the next job. It's not actually as secure as I think, sometimes people think it is. It's got its own risks, but it has become the sort of the default standard, and a lot of funds just have mandates for things that are backed by BLs, they're backed by, so what we're doing at Salus is to bring that onshore with digital risk transformation. Actually, you can be as secure in the middle of the jungle in Uganda as you can be on the water just outside of Singapore.
Exactly. And I want to get to some questions in case we've got any, and we can have the informal bit, because I think that's important for folks to have the chance to explore some of these things. It's a lot to take in. But just, Dom, why is this a Web3 problem? And we're thrilled to be working with IOTA, and we've had a terrific experience writing title documents to the chain, and that's really important. We're bringing the actual ownership on chain. It's not, you get a whole bunch of provenance data, and that's really useful as a permanent record, but are actually transacting on chain. Where do you see this fitting into the global trade problem? It is a Web3 problem, I think. Can you explain to folks why? This is not being shoehorned into blockchain, like it's a real enabler.
Yeah, I think the main question that we need to ask is why is this industry still largely paper-based, right? Like all these governments, all these customs, port authorities, all these big companies, especially banks, right? They trust that paper document more than digital data, right? And so I think that just shows you that it's just very difficult to establish a global standard, first of all, that everybody relies upon, and change the laws and the regulations around that, right? Which we now have with MLETR since 2016, I think, from what I remember. Yeah. But I think the funny part is nobody actually implemented this, right? And nobody is really adopting it on a global scale. And I think it really has to do that people don't just trust digital data, right? You need to have more around that in order to adopt it. And it's just very difficult to digitize such an old industry where we have for example, we focus on commodities, right? So we have chicken farmers in Poland. They need to issue certificates, right? They just have a printer there, right? And so it was very challenging to figure out how we actually digitize this entire system. But I think for us, the three main parts of why this is a blockchain problem is data, right? We need to digitize this data, bring it on chain. Now we have the legal framework around that with MLETR, so that a digital document representation, if it's a PDF or if it's stored on a blockchain as an NFT or a token, has the same legal rights as a paper document, right? So I think that's a very crucial element, because we're still talking about merging the physical world with the digital one, right? It's not just a token. It actually needs to be something like a physical good that is being transferred around. And now we actually have this legal framework that makes it possible that an NFT has the same legal rights as the physical paper document. So I think that's really crucial, that actually builds up trust. And just a very funny anecdote of what we're doing in Kenya, right? So in Kenya, we started our work there in 2018, working with the Kenya Revenue Authorities, working with Trademark Africa to digitize their supply chain. And as you can see, I mentioned 2018, so it's been like 5-6 years that it took us to really work together with the government, with all the port authorities, with all the local partners, to actually trust a digital document the same way they do as they do in a physical paper document. But here's the thing, everything is in PDF form, it gets tokenized on IOTA, but because of the archaic system, they actually print out the document, right?
No way, they're printing out the tokens.
Yeah. So we built this entire system to digitize the data, but the local ones still print out the documents, probably because of the banks, right? Because they're not accepting the tokenized digital form yet. But that just shows you how this system works. But I think, and just to tell you about how our approach has been always, is like you don't build a new system that replaces the old one, right? You actually build a transition that can bridge from the old system. If it means that we have to print out the PDF document, we'll do it, right? Gradually, they will trust it more. They will start to realize, oh, like I actually have this data showing up on my screen. I can trust this data. I don't need to have the physical document. Now it obviously runs in production in Kenya and is really rolling out. So I think that's really exciting. So the digitization part is really critical. And why blockchain is really, once it goes cross-border, it's very difficult to trust this data unless you know it's cryptographically secured, it hasn't been tampered with, it's authenticated, you know who's actually submitting the data and who modified it as well, right? And this is really what we focus on at IOTA, to provide this chain of custody by making sure that you can actually prove where the good has been since its origin, right, inland, where it has been at the port, who at the port actually approved the document, or who at the warehouse approved and saw the goods, and then also the port authorities, right? And so one of these amazing aha moments, and it sounds super simple right now, was actually when we were working with the UK government as well. And previously, they always got these paper documents, and something goes wrong in this paper document, right? Like one digit is wrong, the entire goods are perished, right? They have to be sent back at the port. And now, a few weeks ago, they started to connect to our system, some of the ports, and now they actually see the data show up on their screen, right? They don't actually have to go to the trucks at the port and get the physical paper documents, but they can actually get it there. And so something that took like maybe 3 or 4 days before can be done in less than a day right now, right? So this is really like the amazing aha moment on how much more efficient this can be for the global industry. And so this is really why blockchain makes sense. Maybe just one more point is like the other two parts where blockchain really makes sense is digital identities, right? Where you actually issue a verifiable credential for the traders, for the port authorities, for every actor in the supply chain. You know who they are, and now you can really trust them, right? And so I think, especially in a global context, this is super exciting, because the way that, one of the things that's really holding back trade finance as well, is that it's very easy for a big company to get financing, right? Because they can show their balance sheet, they can show their accounting statements, all of their track record. A new company can't do that, right? A small firm can't do that. Now, if we can actually prove that they've been trading, that they have a track record as well, through these digital identities, because all the data is public, right, and can be verified, it's much easier to trust such an actor in the supply chain, right? So this is why we really focus on digital identities and work with the governments on those government-issued identities on the blockchain. And then the third part, which is obviously, in my opinion, these two are really the foundational elements, data and identity. The most exciting one, where we're going to have the biggest impact, is tokenization, right? Tokenizing the physical commodities, the critical minerals, or also tokenizing the trade receivables, right? That is really where we're going to see the biggest unlock, because what you're going to do is you actually enable these assets to be collateralized in an incredibly efficient way, right, through decentralized finance, through blockchain, so that anybody around the world can finance it, and not just like the banks can open up their financing to those traders. I think this is really where the biggest unlock is going to be, and this is also why we are very excited to work with Salus and with Trade on that.
Fantastic.
I think it's good.
Yeah, I'm glad, Dominic, thanks. You triggered me on a few points there. So, I mean, what we've done in the TradFi sense, we've really proven that we can de-risk transactions, etc., and build data. Not, we're not on the blockchain, but we've got the data. And certainly, to your point, around data proving track records. We have quite a few of the SME firms with us that have been with us for 5-6 years. As a person who's been investing in their transactions, we're able to, with their permission, disclose that information. So I can confirm there's definitely the fact. We're now helping the banks with our data to be able to lend to those SMEs as well.
Banks.
So,
No one likes banks.
okay, I'm sorry, so sorry.
No banks in the room? No, of course
A few ex-bankers. But so certainly, we're digital native and we've been able to give that data and information with that on the blockchain, with tied to digital ID. That's a big thing for us, a big thing for the whole financial ecosystem, which is great. So, I mean, that's where Salus comes in for us as well, is that we're a digital native, but this is now putting everything on digital rails.
Yeah.
And I don't know, maybe we're going to chat about smart contracts, but we've seen blockchain, people talking about blockchain for ages, and I've been waiting 8 years for smart contracts to come.
We just did it. We're doing it.
We're doing what?
You
Just
doing
did
it?
it. Yeah, we're doing
Okay,
our
well,
first one next week.
you can talk about it.
I think-
it hasn't been built yet. That's the next thing.
Yeah.
Tokenize and smart contracting.
Yeah, because other groups, other fund managers in the trade finance space, the biggest problem for any fund manager in the space has been lack of scalability.
Yeah.
And when I talk to the big guys, the big private credit investors, people who need to write $1 billion checks, or they can't do less than that, they say, how do you scale?
Yeah.
And so putting everything on the digital rails and automating it as much as possible, that means that everyone can deploy more money. There's plenty of people who want to lend into this space,
Yeah.
but they just don't see the size.
So that's great. That's a really important point. We'll take questions and wrap up soon. But that brings me to you. So, from where where is the space? Where is the investor community? Are people interested in these new rails, in transacting in tokenized deals? Is it an enabling layer? And kind of where's the appetite for yield and doing the work in the space? We talked a lot about the problem, about how the technology is solving the problem. Where is the investor community? Is it ready for prime time? Is this still a little way off? Is tokenization the key thing 2025 from where you sit?
So I think the investor community is ready in certain markets, right? So where I consider Singapore, Hong Kong, the developed Asian countries, they're ready here. But if I look at closer to where I'm based, Abu Dhabi, Dubai, for them tokenization means tokenization of government bonds, U.S. treasuries, and
Isn't a US is a government bond already not like a token? I don't understand.
yes, it's very basic.
It's reformatting
Yeah,
a token.
or it's real estate,
Right. Okay.
right? So those two are it's a lot more knowledge there. But if I were to explain to them what I just heard from my fellow panelists, there is an educational process that's needed in that part of the world, right? And I'm learning a lot by sitting on this panel as well as to what's happening, and it's relevant for them because they are involved in this trade. They just don't understand how safe it is and how it can transform their business, right? So there's a business idea for you guys that you need to look at Middle East as well, because there is huge amount of commodities, metals trade, Kazakhstan, Uzbekistan, Saudi, Bahrain, UAE, but there is lack of knowledge, right? Now, where they are quite active, right, is they would use blockchain for payments and then just get out of it. They won't be comfortable holding even USDT for any longer than they have to, right? So we then...
That's interesting. There's like a itchy feet if you're in USDT.
Correct. Yeah. And I have unlimited amount of conversations where they're like, oh, I can just convert it to cash and get my overnight yield by putting it in a bank, right? So there are questions from CFOs of these companies where I don't get yield on my USDT, whereas there are other stablecoins which will give you yield, right? So I don't want to hold on to it. What happens if the company who's issuing these tokens, for instance, goes bust, right? So they quickly off-ramp it, and then they sleep easily because it's in the shape of dollars in their bank account. Right. So that's what we facilitate, the bridge of jumping in and out, right? And there's a common theme between the three of my panelists here who mentioned that they're digitizing trade, right? Digitizing ownership. And the world still wants to cling on to paper, right? And I see that because in our world, stablecoins are digital money.
Yeah.
But they still want to cling on to cash, money in the bank, right? And it's going to take some time. That's the evolution that the whole ecosystem is going through right now. And just to finish it off, I think shipping companies, the likes of the large oil exporters in Abu Dhabi, right? Because they're so big and dominant, right, there is a lack of entrepreneurial spirit, right? So the one thing which really used to annoy me when I was at banks is you would never be able to build a trade flow capital at a Citibank because nobody would sign off on it. You would go nuts getting approvals, right? So there is this convincing stage with these larger companies to explain to them and educate them the benefits that can be accrued using blockchain. And I'm confident, but we'll have to go through that painful journey.
Interesting. Trevor, perhaps I'll give you the final word. I'll let you add on, but I was going to ask, since this is a Salus IOTA event, what do we need? What does Salus need? What does this industry need to solve this problem? What's the unlock? It sounds like we've solved the technology. We've got the institutional structures. What's needed?
We have solved the technology. It's there, and I think with any. Don was quite eloquent about it earlier about interoperability and working within existing systems, and actually disruption is done like that. eBay's first trades were settled with a check in the post, and Netflix used to send DVDs through the post. Like, you can solve a problem of it if you come with all the bells and whistles solution to digitize everything and completely change the way the world works. People get put off by it. So, find a particular problem to solve. And with blockchain and stablecoins, we are providing basically shorter payment cycles for our customers, which is completely game changing for them. Being able to pay. If we get product into our facility in Rwanda at 10 o'clock in the morning, through stablecoin payments, they can be paid by 10:30 in the morning rather than 2 weeks. I mean, it's completely game changing for them and the way they manage. And we're also moving into a world where people care a lot more about where stuff comes from. And part of that is sanctions and tariffs and legislation, but part of it is wanting to know, if your iPhone is made with tantalum, you want to know, Apple would like to know, because the consumer wants to know, that it wasn't made by, mined by an 8-year-old. But genuinely, there's a lot more care and concern about origin, and blockchain is a very cheap and very effective way to solve that problem. So, the question you actually asked me was, what is Salus looking for at the moment? Look, we're looking for adoption within the finance community, and that's DeFi and TradFi. I think when we sell this problem, when we sell this solution to SME miners, producers, aggregators, they're all over it. I've got a list as long as your arm of people that want to start putting product on our platform. What we need to do, like any platform, you've got a buy side and a sell side to make sure they grow at roughly the same speed. Otherwise, it doesn't work. So, what we're looking for is people that are interested in investing in this trade finance as an asset class, as a DeFi solution. And that's what we're doing.
We've got. I mean, you mentioned it's $250 million. We think of flows that we could probably fund
within the next month easily. All paying good yields, all fully insured, all in products that the world genuinely needs. These things are going into essential things that people need. It's not tokenizing random things just for the sake of it. These are essential critical minerals. And we've got probably $250 million, and we haven't done any marketing on that side. That's just word getting around, people calling us up. So we're working on the other side of that to get people excited about the yield, about the actual offering there, and keep growing. We're going to. The moment we've got physical infrastructure on the ground in a couple of countries, I'd love to expand more in Africa. I'd love to do Southeast Asia. I'd love to go to Latin America as well, bit by bit. But that's what we're looking for is real excitement from the community here and elsewhere about this as a financial product. And I'd love to see trade finance as an asset class, long run goal. It's an acceptable asset class. It's something that corporate treasuries would think about holding money in. where else are you going to get 13% on a 60-day liquidity in your profile? And really, and we're going to do that through building up the track record, different insurance solutions as well. But yeah, that's where it goes, and it is a good asset class. I've invested in it.
Yep, fantastic. That's a great note. Does anybody have any burning questions for the panel in the room? If not, then I would suggest we're going to... Oh, yeah, please.
Actually, I was an ex-banker with a silent W in front of me.
Thank you.
I think just the last few weeks we've seen the launch of Aussie dollar stable coins. OKX is announcing this week a Singapore dollar stable coin. We've seen the Chinese renminbi yuan sort of surpass the pound sterling as a global trading currency. So given the ubiquitous nature of Tether USDT and USDC, US stable coins, and the Trump administration sort of not wanting any any countries challenging US dollar hegemony, but despite all that, does the panel think there is a need for a non-US dollar stable coin to facilitate commodities trading?
I mean, I'll pass on to you're a better place to answer than me. I think a lot of commodities are priced in US dollars, and we are certainly extent quite lucky to be working in a world where generally they're priced in US dollars. People want US dollars. I mean, they want fiat US dollars in the end. But even when we're in, say, Rwanda, Kenya, like the payments in are generally made in US dollars. It's priced in US dollars. But what stablecoins are doing is really interesting there, is that if you can actually get to a stage where the whole transaction is in stablecoin. At the moment we're doing the stablecoin for the cross-border transaction. That's how we get paid so quickly. It's then off-ramped into fiat USD, which is then how we pay for the commodities. Then often it's transferred into local Rwandan francs or Kenyan shillings, where they pay for the local staff who then go and spend that in their communities. I think the more we move into further downstream the USDT or USDC flows go, the more you'll see actually stable coins being used as a currency in the community, which they're selling products in US dollars. That's the source of the income for much like Australia. But these are commodity economies that are reliant on that, and actually the more they are using the currency that the commodities are priced in, it solves a lot of inflation risk problems to them as it is. So I think you've probably got.
Yeah, so I think it's very relevant. We have this vision that we're working towards where in, I'd say 5 years, give or take, there'll be a parallel on-chain FX market where each major currency would have its parallel stable coin, and you would no longer be transacting bank to bank through traditional channels. I'll give you one example. We see the most amount of non-dollar stablecoin interest in Turkish lira stablecoin, right? And yeah, and there's a stablecoin that is being worked on in Nigeria, so it's called NGN coin. And UAE Central Bank has licensed and is going to be live soon, and UAE dirham stablecoin, and dirham is pegged to the dollar, right? So we're working on a payments network or channel from Africa to UAE using Nigerian Naira stablecoin, which gets converted to UAE dirham stablecoin, and then we just off-ramp it into local currency into an oil exporter's bank account, right? So this is the world which we envision in a few years with an on-chain FX market, where you can hold an inventory of stable coins, and month end, quarter end, whenever you need to do your reporting, if you're a publicly traded company, you just convert it into cash, but you use that stablecoin inventory to move. Aussie dollar stablecoin you mentioned, there's obviously Aussie, they export a lot of metals out of Perth. So there is an active conversation between countries who import precious metals from Australia. And because of the cutoff times, time zone differences, to make a payment in Aussie fiat, it's comfortably a T+2 cycle once and not even counting that you have to do an FX conversion at some point. So we're very passionate about this, and I think this will be a reality, a well-spread reality in a few years. Please.
How long before, so why do you need stable coins? How long before you get government digital cryptocurrencies that will kill it all overnight?
Personally, I think it'll take some time, because the young entrepreneurial companies like us would just move up a lot faster, and there's less bureaucracy. You don't need sign-offs. I've been hearing about a Chinese yuan CBDC for many, many years, and we're no closer to it, right? And there was another point made earlier, which is that the dollar dominance would be threatened with these non-dollar stablecoins. And the answer is yes, it will be. But I always believe that if Nigeria is buying oil from UAE, why do they need to touch the US dollar? And that is the inspiration for these smaller economies, other countries, to have their own stablecoin. And it empowers them, it empowers their economies, it makes their money move at a faster speed. And that's what blockchain is supposed to do, is to empower everybody.
That's a fantastic note to finish on. I want to thank the panelists very much. Thank you all for coming and for your attention. We're going to maybe have a cup of coffee and have a chat. So, but thank you all. It's been great.